one. How's that?
No deal, sir. No deal.
What do you mean? All right. No, that's good. That's good. That's good. That's good. That's good. Well, it looks like we're up and Pat Johnson's in the house. Yeah, so you don't like that idea, huh?
No, I got teens, and I'm excited to get them into the next stage of life. And I don't know, we're in the exciting stage right now. So
What is the second stage? Wait a minute. First stage is adolescence. Second stage is maturity. Not maturity. What do you call that one? Young adulthood. Then it's you're the family building, career building phase.
correct.
Yeah.
Yeah.
How old are the kids?
I got a 16-year-old and a 14-year-old.
Boys, girls?
One of each.
One of each.
Yes, sir.
Cool beans. I got 2 boys, 2 girls.
Oh, nice.
Yeah. Well, actually, I got 2 boys and 1 girl, but the second girl kind of showed up and never left. You'll get that when your daughter brings home someone and it's just like they just keep showing up over and over and over and over and over again. So the funny story about that, my son worked at Friendly's ice cream store, okay, and they were getting ready to shut down. So they shut down, and my son says, "You know what? I'm going to take the ice cream home," because they were just going to throw it out. So my son comes home with 7 5-gallon jugs of ice cream. 7. I'm thinking, what the hell are we going to do? No, we had a big enough freezer for them. So I said, you know what? Go out in the neighborhood, find a bunch of kids who like ice cream and just give it away. So all these little kids are coming to the house and we're giving away the ice creams. Well, some parents came too. We explained the whole thing. It was all good. But the little girl, Beth, kept showing up. Kept coming back, and all of a sudden she's my daughter's bestest friend in the world, and they've been inseparable since age 11. So all my 3 children said, "Yep, she's part of the family," and they insisted I put her in the will. So she actually gets 25% of everything. I said, "Okay, that's the way you kids want it. Fine by me." Who am I to argue?
That's cool, though. You don't find a lot of close friendships that you can develop like that over a lifetime, so that's cool.
Yeah, it is. It's very cool because I took all 3 of them aside. And all 3 of them didn't, not even a fraction of a second when I asked the question, "You guys think Beth should be, in the will?" They said, "Absolutely. Absolutely. You okay with giving her 25% of everything?" "Absolutely." So I think the ex-wife did a good job raising the kids because I wasn't there for the whole time. She left me for someone else. Anyway, besides the point. It's not pour salt on old wounds. Anyway, I'm going to mute you. Don't feel bad about that. All right. You got any questions? Just unmute yourself and ask away. All right. All right. Live. I think we're live everywhere. We are live. JC Conway. Holy cow. You're like the 3rd person I've ever met in my whole days has a name JC. That's my daughter's name, JC. Spelled a little differently. It's Mila. Good evening, East Mila. Malachi Barton. Good evening to you too. Pat Johnson, good evening. Let's see, who do we have here tonight? Who's in the house? Just getting ready to get started. It is Monday. Okay. Also known as week 31. Week 31 is 26. Wait a minute. There's 52 weeks in the year. 26 and a half a year. Scott Davis, Sean Baker, Zombie Boy, Briz, Mike, Skippy, Red Baron, Ed Duran, good evening. TikTok, good evening. Felix, good evening. Oh, just jumped by some. Boris, Big Joe, Carl, Roddy, Dan, Francisco, Que Pasa? Dan, Chevy Lano, okay, Vic Steele, Vivi, what's happening? Martin, how are you today? Menge, what's happening? Cali Dude, one secret to success. Hey, I'd like to know what that secret to success is. JJ, Robert, what's going on? Rick, Casey, hello, hello, hello. All right, Jeff, B-Rad Daddy, good day, good day, good day. What do we have left? Logan, Rockman profile, blah, blah, blah. All these people just saying hi. All right, DA, David, Carl, what's happening? Nicholas, your favorite dividend stock today. Ooh. It changes. It does. So today, I have to do a little bit of thought. Like, give me a few minutes while I think about this one. Come on over here to say hi to these guys over here. Holy cow, there's a lot of guys over here. A lot of people. Wolst, good evening. Robert, David, Wayne, Brazad, Carlos, Accord, Greek Golfer. Jeff, Edison, Jerry, top notch. All right. Johnny, good evening, good evening. Wow, a lot of people saying hi. Hi, hello. Oh, wow, look at all these people. Honeybee, CIFR, put me down for a 6. Put me down for a 6. Cool beans. I'm going to let that one run away in my mind. Okay, so what do we have over here? YouTube. Now, YouTube, I'm going to apologize to you guys because YouTube, I do not have a moderator on YouTube yet, which means I get a lot of freaks and geeks. I do. A lot of weird people just come up with the weirdest stuff to say to me just to throw me off kilter. Fine, do whatever you want. Doesn't faze me a bit. It just wastes other people's time. So, just to let everybody know, in case... start streaming. Okay. All right. Streaming should be going shortly. Okay. So, just in case... anybody who's been here for a while that wants to be a moderator on YouTube, I'd greatly appreciate it. I would. It'd be so nice to get rid of some of the trolls. Let's just call them trolls for a lack of more civil words. Okay? All right, that being said, okay, used to do this. Okay, right. See, another person on YouTube coming up with totally inappropriate things to say. Hi, it's 1:38 in the morning. Well, alrighty, it's 8:47 here. Hey, it's Mr. Time too, Gregory. Why does Santa? I'm not even going to bother with that one. All right. Why are dividend stocks better? Doesn't the share price change? Entropically driven. Interesting name, entropically driven. All right. Well. Now, everybody has, I'm just going to answer your question. Everybody has their own goal, okay? So you have a goal. I mean, we're here for a reason. We're here basically to try to learn how to do some investing. So you have a goal to invest some of your money to get you from point A to point B in the time period in which you feel comfortable. Well, we're all different. That being said, different stocks produce different results. Different trading strategies produce different results. Now, the reason I chose dividend stocks, specifically good quality dividend stocks with at least 2 decades of profitability. The reason why I picked those, wait a second, also they have to have weekly options. So 2 criteria and only 2. Consistent profitability, dividend stocks that consistently increase their profits, and weekly options. The reason I pick those is 1, they're predictable. 2, they're safe. They've been around for a long period of time. And you didn't answer my investment question. I like turtles. I like turtles. I didn't see your question. I like turtles. Well, yeah, I ain't answering that question. That's inappropriate. Again, like I say, I need a moderator specifically to get rid of people like that. So as I was saying about dividend stocks, they have a consistency about them. They're not big movers. They don't jump up and they don't drop like a rock. Okay, they're boring, they're slow, but they're consistent and they're profitable. So that's what I'm looking for. I'm looking for simple, safe, predictable, consistent 1% per week. The only way you can get consistency and profitability together with very little risk is to have something that is dependable, something that is, I wanted to say reliable, but isn't that the same as dependable? Predictable, safe. Well, that's what I'm looking for. I'm 61, I'm retired. Whatever money I come up with is my own doing. All right, I'm not old enough to collect Social Security, and I'm not really, I've seen what they're offering me. So yeah, I'm going to take it next year. Okay, I'll just add it to the kitty. My children and grandchildren will inherit, something nice if I invest it properly. And that's basically what we're doing here. We're creating a video log for my children and my grandchildren to watch while I'm gone. When I'm gone, they're going to say, well, how the hell did Dad do that? How did Papa G do that? Well, I get over 1,000 videos. The answers are out there. You just need to ask the right questions. Because the better questions you ask, the better answers you're going to get. The better answers you get, the better life you're going to have. Because everything is basically a question and answer scenario. Ask a better question, get a better answer. Get a better answer, get a better life. It's pretty simple. All right, so let's finish up saying hi to everybody, and then we're going to jump in and start looking at stuff. So do yourselves a favor. You have any questions? Ask. You want something that you don't understand? Write it down. Ask the question. Still not 100% better yet, but it's getting there. Okay, random. Yep, he got rid of his questions. Okay, fine. Ricardo, Remy, Singh, what's happening? Valton, good evening. B-Rad Daddy. Fun Run. Ammo, Noel. With Harry Anos from Dustin, Florida. Maury Povich. All right, good evening. Hi, Mike Oxlong checking in. All right. Cam, good evening. Pablo, I like gamma scalping. Alrighty then. I have no idea what that is, but hey, if it works for you, good luck with it. Okay? Don't bother trying to explain it. I have no desire. TSYY, why not just hold long term, pays weekly? Oh, Reefer Madness, TSYY. TSYY. Here's your reason right here. TSYY has no options. Okay, so how am I going to get weekly cash flow from something that doesn't have a way to sell it on a weekly basis? But let's take a deeper look into it. All right, so let's go on over to Yahoo Finance and see exactly why Reefer actually enjoys TSYY. So let's find out. Here we go. TSYY. All right, so TSYY pays weekly. Well, let's take a gander. All right, here we go. Granite Shares Yield Boost TSLA ETF TSYY. Dividends. See, I like to look at dividends only. See, dividends only. Going back, all the way back to January 1999 to current. I want to look at the dividends. I want to see how wonderfully these things increase. All right. So that's it. This thing's not even a year old. You're all excited about an infant? Are you shitting me? Really? The very first dividend was December 2024, 4.7. Then it went to 74. Then it went to 2.50, and then it went to $1.50. Then it went to $1.40, $1.30, 30 cents, 30 cents, 29 cents, 30 cents. What about that is predictably increasing? Hell no. I don't invest my money into a company that's a year old. You can do whatever you want. Seriously, you can. I like companies, only companies that have proven the test of time. 2 decades. 2 decades, that's 20 years of consistent profitability. You like TSYY, fine. Have at it. Do whatever you want. Let's go to summary and find out exactly what they've done for the past year. Because they're not even a year old yet. December 27th, 2024 was the first dividend. All right, it's $9.11. Okay. Year-to-date daily total return. Who asked for this one? Reefer. Year-to-date daily total return, negative 23.73%. Negative 23. Now, explain to me why you think negative 23% year-to-date is a good thing. I'm kind of curious. Curious minds want to know. I'm kind of curious. Reefer, explain to me in a manner which I'll understand why you think negative 23% is a good thing. It's not even a year old yet. Okay, that's the reason I don't do companies that don't have any historical performance. Okay, this is not even a year old yet. No, thank you. And it doesn't have any options. Enron, I have 3 covered call contracts expiring Friday. You inspired me to start. Yay, Enron, 484 in premiums, not bad. Cool beans. Drizzle, Rigetti Spaghetti. Really? You want to look at RGTI? All right, well, let's look at RGTI. RGTI, Rigetti Spaghetti. Here we go. Rigetti Computing. No dividends. Look at this. Forward dividend and yield, nothing. EX dividend date, nothing. 1 year target, 15. Well, we're currently at 1544. So they're expecting it going from 1544 to 1583. A whole whopping 40 cents in a whole year. Okay. Sorry, Rigetti Spaghetti. Let's take a look at how often have they increased their dividends. Because after all, this is a dividend investing channel. So does Rigetti Spaghetti have dividends? And if so, what do they look like? Oh, imagine that. There are no dividends in the selected time period. So I'm kind of curious, Drizzle, if it has no dividends, why are we looking at it? It is a channel that specifically says the very first few words, dividend stock talk. So we're talking about dividend stocks. Well, this is not a dividend stock, so why are we talking about it? Sorry, Drizzle. No to Rigetti Spaghetti. Matthew, what's going on? Taylor, Benito, Drift. Drizzle think that's funny. All right, so let's keep on moving along. MB, are there really companies 2 decades old who offers available shares? Are you shitting me? You really asked me that question? MBM, the stock market has been around, are you ready for this? 400 years. Well, it's actually 420 something years, but over 400 years. There are companies here in the United States that are still profitable to this day that have been on the U.S. stock market for over 200 years. So yes, so simplified, yes, there are plenty of companies that are over 100 years old, plenty of companies over 50 years old, plenty of companies over 25 years old. HYLD. Carl, I have a bad feeling about this. I do. HYLD. Let's go take a look. Carl, you ready? High yield ETF. There are no dividends in the selected time period. Carl, why are we looking at that? Seriously, when you got the invitation, when you showed up, did you not see the intro? Dividend stock talk. Dividend investing for weekly cash flow. Well, both the title and the subtitle both have the word dividend in it. Well, this thing doesn't. So no, I'm not even going to bother looking at it. User 6111811088565. Oh, whatever. Nike. Well, let's take a look at Nike. Now, Nike is on my list, so I don't have to look at this. Nike, NKE. Now, I like Nike, and Nike is on my list, and I do buy Nike every once in a while. But anytime I look at a stock, I'm looking for 5 things, and these 5 things are fun things. Let me show them to you now. You know how to do it. You do. Okay, anyway. 5 things. You ready? High, low, where was it? Where is it? What's the direction? Up, down, up. That's basically it. Up, down, up. We're at 79.24. I'm going to say no right off the bat. Has nothing to do with anything other than this. Okay? It's at a high. I don't buy anything at a high. Okay? You've heard it hundreds, if not thousands of times. You invest in the stock market, you buy low, you sell high. Never, ever, ever once have I heard somebody said, hey, it's at all-time high. Let's buy it and wait for it to go higher. No, never heard that. Doesn't make any sense. Why would I buy something 79.24 hoping that it's going to go higher? Well, after it went from, what is that, 59 to 80, that's 21 points. 21 points. Now, 21 points on a $60 stock is 30%. This, my friends, is a 30% move. You really seriously think it's going to keep going up? It could. Or could it be that people are going to take profits? And when people take profits, stocks drop. Plain and simple is what it is. Ooh, got a question over here. What do you have? Mark! Hey, James. I'm the Mark that emailed you about moderating YouTube. Whoa! Let's chat when you have time. I'm ready to help now that I'm back. Awesome, Mark. Now, Mark, I got 4 YouTube channels. Wait a minute. 1, 2, 3. Three YouTube channels. There's only one I really need you to work on that, and that's the one right there. For some strange reason, people like to congregate to that channel and ask the weirdest questions that you can imagine. All right. Sure, but if a company is profitable, who'd want to sell any part of it? Oh, the profitable ones are already taken. No, dude, they're not. Okay, MBM, what you seem to miss. And a lot of people miss this. And I'm trying to explain it as best and as easiest as possible. Okay? We're all... Wow, why am I not seeing the bottom of that? Okay, let's go back right there. Okay? What you're missing, MBM, all right? Follow closely so you understand, because every single stock does this. Every one. You ready? Up, down, 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 up, down. That's all they do, up, down, all day long. People like me jump in when the stock's low. We sell when it moves up. Now, we all have a different exit strategy. Mine, I'm taking off at 1 or 2%. I honestly really don't care. I'm not in this for popularity. I'm not in this to make anyone feel happy. I'm not in this for any other reason except for consistency of profitability and the protection of my assets. That's it. Okay, I'm 61. Any money that I have, and I don't know if you all know this. I'm pretty sure you all do. But you may not know that we, humans, are the only species on the planet that's got to pay to live here. So at some point, and they will let you know, trust me, they will let you know. You go to work one day and they say, well, hold up, you're just too damn old, stay home. You become replaceable. You become a liability to the company. Because whether you want to agree to it or not, I want you to stop for a second. Listen to this. You ready? Tick, tock, tick, tock, tick, tock, tick, tock. It's happening in the background. Nothing you can do about it. You can't run from it. You can't hide from it. It's there, nagging at the back of your head. Time is passing, whether you want to agree to it or not, whether you're happy with it, whether you're unhappy with it. It's totally irrelevant. Tick, tock, tick, tock, tick, tock. It's happening. You're going to get older. Your money has to come from somewhere. Okay, you got 2 choices and only 2. Do not let anyone confuse you or tell you or lie to you. You got 2 choices, that's it. Number 1, take responsibility for your own money. Learn how to invest it. Learn how the game is worked. Whether it's in the stock market, whether it's in real estate, whether it's in futures, whether it's in commodities, whether it's in cryptocurrency, no matter what it is, you need to pay to live on this little rock. Simple. It is what it is. Argue all you want. It doesn't affect me one way or the other. But we do have to pay. We do have to pay to live here. And after your useful days, because your boss will tell you, you get 3 opportunities to quit working, only 3, because your boss will tell you, number one, hold on, dude, you're too old. Stay home, retire. We got a nice little package for you. Here's a little gold watch, gold-plated watch. Years ago, they used to be gold watches. Now they're just gold-plated. Or maybe you're in a company where you get a card. You know, they go to the dollar store and get 2 cards for $1 because you're not the only one getting fired. Let go, downsize, whatever you want to call it. But we're the only species that got to pay to live here. So at some point in time, your money has to come from somewhere. It's either going to be Social Security, or it's going to be from your savings or your investments. So here it's just a small glimpse of what's possible. So when I tell you I'm looking for a simple, safe, predictable, consistent 1% per week. Now think about it. 1% a week is 50% per year. Now, is 50% per year? Well, what does that mean? Well, I've been working since 1973. So if I have an account with, all this money in my name, let's say it's $100,000. So at my age, 61, I got $100,000. 1% a week is $1,000 a week. That's $52,000 a year. Now that's simple interest, not compounded. Okay? Money does get a little confusing, but if you just take a look at the broad strokes and not worry too much about the details, okay, you have to figure out where is your money going to, where is it coming from? Because at some point, you're going to be 100% responsible for your own money. Or, number 2, you give it to someone else, a money manager, a hedge fund, a banker, and let them invest it for you. And they will give you the returns after they take their slice, of course. So, do it yourself. Let someone else do it. Plain and simple. But don't ever, no matter how loud you crank up that radio, in the background, tick tock, tick tock, tick tock. Friday's coming, whether you like it or not. Next month is coming, whether you like it or not. Christmas, right around the corner, whether you like it or not. Whether you're ready. There is no good time for anything. Just do it. Anyway, let's keep on looking. So Nike, I like it, but I'm not going to touch it because it's at a, what is that? Like a 90-day high? Yeah, no thank you. I have no desire to do that. So what's next? Reefer. Well, first one didn't look good, so let's take a look at Pepsi. Pepsi. Now, I like Pepsi. If you didn't know, Pepsi is what you call a dividend king. Now, somebody asked a little while ago, are there really companies that are over 20 years old? This bad boy's over 100 years old. This bad boy has been profitable consistently for over 5 decades. So why don't you have this on your list is a better question. So Pepsi is on my list, but here's the thing. With Pepsi, like every other stock that I look at, timing is everything. So let's take a look. High, low, where was it? Where is it? Look at the motion. Sideways, down, sideways, down, sideways, up, down. So we're at 140, 157 at this moment in time. By looking at this area right here, we're in a, what is that, 5 or 6 day downturn. So let's zoom in a little bit closer. Now, Pepsi is on my list. I do like Pepsi. However, we talked about this a couple of weeks ago when this happened. You get a gap up, like this is called a gap, where there's nothing here. There's nothing between, see all these lines are like next to each other and these ones are all connected. There's nothing here. That's called a gap up. Eventually, that's going to fill. Well, she was here at the bottom. What is that, 133? Shot up to 147. Now she got 1, 2, 3, 4. 4 days to the downside. Well, how much further is it going to come down before it finds the bottom and turns around? No, I love Pepsi, I do. It's just not the right time for me to buy Pepsi because you got 4 days to the downside. Now, I will be looking at Pepsi in 2 weeks because she's here now. So the rest of this week, Tuesday, Wednesday, Thursday, Friday, she'll probably end up somewhere around 138 if we're lucky. And then next week, it'll probably be down this way if the profit taking continues. So I'm going to write Pepsi down for next week. We got a nice list for next week. I'm going to write it down for next week and the week after because she just might not hit what we want next week. All right, user 611-811-1800. I'm going to call you Peter. He wants to take a look at Procter and Gamble. Again, in case you didn't know, Procter and Gamble, over 100 years old, consistently increasing their profits for more than 5 decades. Dividend king. So let's take a look. Procter and Gamble. PG. Interesting. High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up, down, up, down. 157. So we get the bottom of the year right here. That's the bottom of the year. But what happens? She bounces off the bottom of the year, pulls back a little bit. I want to show you a little bit closer. Let's zoom in a little tighter. Okay, so here's the last 30 days. Your 30-day high, your 30-day bottom. Now, from the 30-day bottom at 152, she jumps up to 159. So that's $7. So $7 on a $150 stock is only 5%. That's a 5% move. But profit taking has already started. Okay? Profit taking has already started. You got 1, 2, 3. 3 days coming down. So again, no for Procter & Gamble, but it might be good in 2 weeks. So let's put Procter & Gamble down 2 weeks from today. Okay. Next. JC, good evening. Minty Fresh, back again. I'm pretty good at names. I remember when people show up. We already looked at TSYY. It suggested it's going to be a no this second time. Okay, when I say 2 decades, that means 20 years. TSYY doesn't really thrill me. Minty Fresh. Oh, can we look at Chevron, CVX? Here we go. High, low. Where was it? Where is it? Look at this motion. Up, down, up. Cool beans. I'm going to say no because it's at a 90-day high. I don't do the 90-day high thing. Okay? Here's bottom here. Up, down, up, down, up. Okay? I don't have any desire whatsoever buying it high. Dirt Farmer. He doesn't need a moderator. I got 3 moderators here on TikTok. So on TikTok, there's 3 moderators. Okay? YouTube, there's 0. And I get weird questions on YouTube. I don't get them on TikTok because the moderator sifts them up. Can you please do Costco? C-O-S-T. No. High, low. Where was it? Where is it? Look, it's up, down, up, down. It's gone from 1,070. Now we're at 933. So what is that? 2 months coming down? I mean, if you like Costco, hey, keep your eye on it because eventually it will find a bottom and it will turn to go up. But I don't do stocks over $250. However much money you think I got, I don't. Okay? I don't have enough money to buy 1,000 shares at $933 a share. Just no. Enrique, I barely started, but I do have companies on highs waiting for it to collapse a little or a lot. Gotcha. Eric. Applied Materials bounced off 185, 3x in 3 weeks earnings. Worth a shot? Well, let's take a look. AMAT, Applied Materials, another dividend king. Okay. High, low, is. Look at the motion. Down, up, down, up, down. What's going on here? Okay, well, let's zoom in a little closer. Because this here may look nice because you get the bottom in April. Now she shoots up. Well, great. What's next? Well, from April, bottom, she shot up to 200. Now she pulled back to 190. She dropped $10 on a $200 stock. That's 5%. Okay. High, low, is, up, down. Now she's going up again. Could this be the turning point? It could be. Your top is right here at 201. And she drops down here to 184. A gap down and then a gap up today. Well, I like 2 days to the upside before I jump into anything. So I got a couple of days more to go before this looks good. Now, Applied Materials, if you like it, well, it's a relatively good company. It's been around for a long time. And yeah, it is consistently profitable. But let's check out the numbers. Now, if you're not familiar with what I do, I buy good quality dividend stocks. Applied Materials is one of them. But I only buy them under certain circumstances. Let me briefly explain. Okay? Now, stocks have a tendency to go up, down, up, down. That's all they do. So the idea is to have all the odds and probabilities in your favor. So, and it's always going to come down to the amount of time you have available to invest into your little endeavor. Now, the longer you sit in front of your computer screen, if you're looking at the right stuff, pointing in the right direction with the right strategy, well, you can do rather well. Now, I could, if I wanted to, sit in front of my computer all day and trade based on the movements. Be a day trader. It's very profitable for a lot of people. Okay? However, consistency. Does it consistently do what we want it to do? So at 190, if I'm going to buy it at 190, I do what's called a covered call. I'll buy it at 190, and then I'll turn around and sell it at 190 if it's in an upward trend. I like 2 days to the upside after a pullback. Pullback is basically when you have a high and then it pulls back, profit taking. Stock drops, whatever you want to call it, retracement. There's a lot of different words. I call it profit taking because that's what I do. Now, if I bought it down here in the 170 area, I'm not seeing everything. I got to move that. Sit tight. Sit tight. All right. Let's try this one more time. Right there. Okay. Yeah, I wasn't seeing the whole thing. Okay. Here's your bottom here. She jumps up. Yeah, I'm going to take a profit. When it gets to a certain height, there are people out there just like me. So from 176 to 200, that's a $25 increase. So you have people like me say, ooh, I'm going to take that profit. You take that profit, all of a sudden the stock drops because there's enough. Because once one person starts taking profits, well, the stock starts to drop. And as the first domino falls, so do the rest. So starts here, profit taken, profit taken, profit taken, profit taken. Then it gets to a point here where you have people like me say, hold on a second. This thing just dropped 4, 5, 10%, whatever it is. Well, it looks attractive now. Now I jump back in again. But I jump in at a 30-day bottom and 2 days to the upside. See, 1, 2. But the third day pulled back, so no. But today is the third day. Okay? 1 day was, right. So the bottom here, after the 30-day top, the bottom here, Wednesday, Thursday, Friday pulled back, but today would be the third day to the upside, which means I would jump in now. So at this moment in time, the 190, if I bought it at the market at this moment in time, the current price, 190.27. So I would be selling it to someone else at 190. Both because it makes sense. If I buy it at 190.27, I want to sell it at 190. Now you might be thinking, why am I selling it for less? It's a valid question, isn't it? Why would I buy it at 190.27 and then turn around and agree to sell it to someone else for less? 190. Okay, the strike price right here, 190. No? Nobody knows the answer? Well, because what I'm doing here is a strategy called a covered call. I'm basically giving somebody the right, not the obligation. I mean, they don't have to if they don't want to. But here's the thing. If they want to buy it from me at 190, they have to pay me $3.45 for every share, or $340 for every contract. Think about it. You add the $3.45 to the 190, Now I'm not selling for 190. Now I'm selling it for 190, but I'm walking away with 193.45. Now I bought it at 190.90. Oh wait, 190.27. And I'm selling at 193.45. So my profit is, the stock doesn't even have to move. It's a beautiful thing because the stocks go three ways. That's it. Up, down, and just nowhere. Is nowhere a direction? Well, yeah, it kind of is. Okay. So if the stock doesn't move at all between now and Friday, because the expiration date on that covered call is the 1st of August. Right there. See, 1st of August. So if I buy it tomorrow morning at 190, I sell it to someone else at 190. I collect $3.45. I'm walking away with $3.45. Well, $3.45 on a $190 stock. Well, that's well over 1%. And the stock doesn't even have to move. That's the beauty of it. Okay, so I got a couple things going for me. Number one, 30-day high. She drops, turns around, starts going back up again. Well, now the trend is in the right direction. Number two, the company's over 100 years old. Number three, the company has more than 5 decades of increased profitability year after year after year after year after year. I can keep doing it for 50 years, but year after year. So I want all the odds and probabilities in my favor. So the trading strategy I'm going to do, I'm going to buy the stock at 190.27. I'm going to sell it to someone else for less than what I paid for it, 190. I'm going to walk away with $3.45, which is more than 1% of what I paid for it. So I'm making a 1% profit on a stock that's over 100 years old, has a good dividend that consistently increases. I'm not seeing the issue. Okay? Jeff's life. Jeff's life. Jeff, time to pick on you. You ready? Hope you're ready for this, Jeff, because here it comes. Now, it just moved. Did his entry just disappear? It did. Here it is right here. Jeff's life. Now, Jeff, I need you to explain to me in a manner in which I'll understand. MSTY has paid 132% dividend yield in the last year. Okay, Jeff, let's take a look at it. Somebody always comes up with that one. Always. It's okay. All good. MSTY. But is he correct? Yeah, he is correct. What is 132% dividends? Well, it's a disaster waiting to happen is what it is. So this is just my take on it. Is it right? Is it wrong? Is it indifferent? What is it? I don't know. Okay, so Jeff, I'm not 100% sure you actually checked all your facts, but let me fill you in just on a few. Now, I always tell everybody, if you're going to be playing this game, don't confuse yourself. It is a game, kind of like Monopoly, 4 greenhouses, 1 red hotel, you know, don't pass boardwalk, don't pass go, don't collect $100, go straight to jail, that kind of crap. All right, so here it is, MSTY. Now, let's take a look at historical performance with MSTY. Now, we're here on Yahoo Finance. So this is not my numbers. This belongs to someone else. Let's go all the way back to the very beginning. And the very beginning for MSTY is April 4th, 2024. So this company's not even a year and a half old, and you're excited by 132%. Well, I would be too. I'd also be a little nervous because think of it this way. You're putting money into MSTY. Now, you need to explain to me and everybody else listening, how can any company at all pay more out than they have coming in? Think about it. They're paying out 132%. Well, let me see if I can break it down for you, okay? If I work a nice week and let's say I make $1,000 this week, my profit is $1,000. Well, now I have to pay out 132% of that. Well, if my profit is $1,000, I have to pay out $1,320. Where the hell is that other $320 coming from? I only made $1,000. But if I'm paying out 132%, where is that 32% coming from? It's an honest, valid question, Jeff. Where are they coming up with that additional 32%? And why are all these people working there for free? Because think about it. Businesses are in business to make money. So they make a profit. Well, their profit is being given out plus an additional 32%. 132% they're giving out. How the hell do they sustain those numbers on a company that's a year and a half old? Let's take a look at the numbers, Jeff, and you tell me if you still think it's a good idea. The very first dividend they paid was $4.12. Well, that's awesome. The second dividend they paid, $2.52. Now, hold on a second. Now, the definition, as far as I understand, of consistent profitability would be, well, profitable more than last year, or more than last week, or more than last month. So if the first month, April 24, is 412, the second one is 250, isn't that going backwards, Jeff? If the first profit is 412, the second profit is 250, I don't care where you went to school, that's backwards. That's not consistency profitability. Okay, let's keep progressing. The third one's 303. All right, that's higher. Then 233. Well, that's back down again. And then 194. Well, that's back down again. So it appears that they're losing money. So if they're losing money, how the hell can they pay out 132%? Jeff, have you asked yourself that question? If the dividends on a company that's not even 2 years old yet, if the dividends keep decreasing, how can they possibly give away 132% of their profits? I'm curious, Jeff. I don't do MSTY because it's not 20 years old. I also don't do it because it's not even 2 years old yet. Okay, and I also don't do it because this here makes no sense to me whatsoever. It makes sense, but in the area in which I want to invest in, it makes no sense. Why would I invest in a company that keeps losing money? 250 to 3, 233, 194. That's backwards. 185. That's backwards. No, back up to 420. Then you get to 440. Oh, great. Well, now it's down to 3. That's a 25% drop. Now it's down to 220. Another 25 to 30% drop. Now it's down to 2. That's another 10% drop. Now it's down to 137. Now it's down to 133. How the hell? What? This is the part where I say, Jeff, what the hell are you thinking? Now, don't get me wrong. The 132% profits, dividend yield, that's attractive. But they're losing money. Where's that money coming from? Where is the money that you're so happily collecting coming from? Because at some point, somewhere, someone's going to get the brown end of the stick. Drip Dog. Okay, never heard of it. Okay, Mike, good evening. Maker Beats, what evening? Mike loves stock, cool beans. Salaried Zombie. I would need to have 8 million in a balanced portfolio to give equivalent to my yearly income. Well, what the hell are you doing here? Now, the way I look at it, okay, 8 million bucks. Well, that's 8 million bucks is $80,000 a week. You need $80,000 a week to live comfortably? Someone's got a spending problem. I'm dividends. Okay. Niculator. Hood. Robinhood. Why do I want to look at Robinhood? Hood. Give it a second. Okay, Robinhood. There we go. Look at that. There are no dividends in the selected time period. So why are we looking at it? Okay. Vic Savage, what's going on? Cause Bitcoin, hell no. MSTR, double hell no. MSTY, double hell no. Free yourself from degenerative fiat system. Okay, thank you, Cuz. Jeff's Life, rookie pick. I get over 100% on my dividends. Wonderful. I'd love to have a conversation, Jeff. Okay, because I'm curious. Okay, companies, never mind. I'm not even going to entertain it. You know, I've been doing this long enough to know. Eric, Procter & Gamble earnings tomorrow morning. Okay. Taz, Eric, what's going on? Martin, good evening. Tracy, Minty Fresh, thank you. How to make the 1% per week. Gee, we're going to go over that as we progress. I'm still enjoying the show. Thank you, Big Drew. Niculator, we already talked about Robinhood. Grace, can we look at Coca-Cola? Of course, KO, Coca-Cola. Another dividend king, been around for over 100 years. Now, in all my years, I think I may have bought Coca-Cola twice. There's a reason. High, low, where was it? Where is it? Look at the motion. Up, down, up, down. All right, it's at 68.09. It's actually in a fall at the moment, looking for a new bottom. There we go. Okay, here's your 30-day high, $70. Now we're down here at 68, searching for a new bottom. So as soon as the bottom shows up, now how do you tell bottom? By supporting days to the other side. Well, how do we know today's the bottom? We don't. We won't know until tomorrow, because tomorrow will give us another candle right beside it, and that will be either higher or lower. But at this moment, it's just not right, because it's at the bottom. So we got to wait for it to turn around and go back up again, which they do. They go down, they go up, they go down, they go up. Dylan, Alcoa. I love Alcoa. It's going to be a no, though. Here we go. High, low, was, is, up, down, up, down. See, it's just pulling back right now after this little run-up. You get a 90-day run-up right here. Let's take a look. So here's the bottom right there, second week of April. Shoots up. Here's the high right there. And you got 1, 2, 3 days pulling back. Okay, so Alcoa is going to be great in 2 to 3 weeks because you have this big run-up from 22 to 32. Now, 22 to 32 is $10. Well, $10 on a $22 stock is just a tiny bit below 50%. It's a 50% increase right there. Yeah, there's going to be profit taking until it's done. Funny thing, and it's so simple. Okay, now I'm going to share something with you. Now, the reason I'm here, okay, back in 2008, my 9-year-old daughter jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" So I'm trying to teach a 9-year-old. How do you teach a 9-year-old how to invest in stocks when clearly most adults don't get it? Adults have a tendency to make it more complicated than it needs to be. You can say whatever you want. I can get my 5-year-old grandson say, "Hey, little buddy, where's the high?" "Oh, Papa G, it's right there." "Hey, little buddy, where's the low?" "Oh, Papa G, it's right there." "Which direction is it going?" "Oh, it's going up." A 5-year-old can tell you that. What else? Okay. Well, what goes up must come down. Spinning wheels got to go round. Stop all your troubles by the riverside. Ride a painted pony. Okay, see, up, down, up, down. That's all they do. If you're expecting the stock to come to your house and make you dinner, take the dog for a walk, take out the trash and mow the lawn, you're sadly mistaken. They go up, they go down, they go up, they go down, they go up, they go down. That's all they do. You take a look at any chart you want. Any chart you want. up, down, up, down, up, down. That's all they do. Stop making it complicated. What is this? Up, down, up, down. Where's it going? It's going down. It's going to continue to go down until it's done. Well, what happened here? It went down until it was done. And then it turned around and it went back up again. That's where I want to jump in, right here. They all do the same thing. They hit a bottom, they turn around, they go back up. That's where I want to jump in. So there's a few questions. Question number one, is it a profitable company? Alcoa, yeah, been in business for over 100 years. Okay, question number two, are they consistently profitable? Yeah, more than 5 decades of consistent profitability. Great. Number three, what's the direction? It's down. No thanks. Next. That's it. But before I say next, I will take that and write that down for next week or the week after. Because once it is done going down, it's going to turn around and go back up again. That's when I want to look at it. Now, every week, which we haven't looked yet, so I'm going to look tonight. Every week we look to see how many stocks are available. So we're going to do that right now. Let's do this real quick. See how long it takes me to do this. Finviz, there we go. Finviz. Finviz tells me, it's called financialvisualizations.com, gives you lots of information about every single stock there is. So I want to take a look at the screener because I want to find out one question and one question only. All right? How many companies are available this week? Because it changes every single week. Last year it was 10,236. This week it's 10,283. Right there, there's the number. It changes every week. 10,283 different companies. Alphabetically, you can read them all. Right there. Okay, you can decide how you want to sort them out. A lot of good information there. That's about as far as I use it, though, because it doesn't give me exactly what I'm looking for. But it does give me that one, and it gives it to me plain and simple. All right, let's get out of that. So, 10,283 different companies. So, what's on your list? What's in your wallet? What's in your wallet? Think about it. 10,283 different companies. How do you choose? Well, for me, I get 2 criteria, and only 2. Okay, so out of 10,283, 2 criteria. You ready? Number 1, consistency of profitability. Is the company consistently profitable? Number 2, weekly options. That's it. Consistently profitable for at least 2 decades and weekly options. That's it. I really don't care anything else. Think about it. If it has more than 2 decades of increased profitability, well, more than likely it's a dividend king, dividend aristocrat, dividend champion, dividend contender. Or it could be on Warren Buffett's list. Is the company consistently profitable? Do they have weekly options? Out of the 10,283, well, I only look at about 300. Now, I take that 300 and I throw it into a calendar. Why do I throw it into a calendar? Because the calendar breaks up those 300 stocks by their dividend date. Now, why is that important? Well, that's important because most dividend stocks are predictable and boring. But this is called an EX dividend calendar. It tells you when they're paying their dividends, 4 dates. 4 dates to remember. Date number 1 is the announcement date. That's tell you what they make and when they're paying it. Number 2 is the EX dividend date. That's the last day the stock trades before the dividend is paid. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Plain and simple, right? Date number 4, that's when you get paid. So if stocks, dividend stocks, are picked out here like cherries on a tree, I can just pick whichever one I want. I take a look at the chart. Is it the right time to buy? Now, the reason why I want the calendar is because dividend stocks have a tendency to increase in value just before the dividend date. Think about it. If you knew when the stock was going to move ahead of time, because you can take a look at the calendar, right? There's 365 days, 266 trading days, 4 quarters, first quarter, second quarter, third quarter, fourth quarter, January, February, March, April, May, June, July, August, September, October, November, December. Interesting thing about the 4 quarters. Each quarter has 66 trading days, roughly. 66 trading days, 13 weeks. Week 1 through week 13. Kind of like a deck of cards. Okay, 4 suits, 13 cards. 13 weeks. Okay, 13 weeks. Now, so I'm taking my 300 stocks and I'm throwing them into the calendar. And the calendar is going to show me those 300 stocks in 1 quarter, 66 days. So 66 days, 300 stocks, that's about 5 stocks a day. About 5 stocks a day are trading and have weekly options. Now, if I know when the stock's going to move based on the calendar, okay, because stocks, especially dividend stocks, they're over 50 years old or over 100 years old. They're consistent. They do the same thing year after year after year. Think about it. Coca-Cola, Pepsi. Well, they've been making soft drinks for over 100 years. So, question I got for you, Jeff, how you doing? And a Nick. I don't know how to pronounce that one. Think about it. Coca-Cola and Pepsi have been making soda for over 100 years. I'm pretty confident that they're going to make soda long after I'm gone. Anybody have any evidence to the contrary? Anybody hear a rumor that Pepsi or Coca-Cola is going to go bankrupt because people stop drinking Coca-Cola and Pepsi? Coca-Cola is the #1 soft drink on the planet. Not in the United States, not in North America, on the planet, the #1 soft drink. Is that going to disappear overnight? No. They're probably going to make Coca-Cola next year, the year after, long after I'm gone. John LL Beast Mode. Yeah, you do. Stop being modest. You can't win with scared money. Go big, get big profits. Okay, John, I appreciate that take on it. But here's the thing, John. By looking at your picture, you got no gray hair, which means you ain't retired, which means you can screw up royally and you still have time to make enough money to retire comfortably. Yeah, dude, I'm 61, okay? And I'm at that point in my life where I'm a hard time accepting the fact that I'm getting older. I just can't do what I used to be able to do when I was in my 20s. I used to play soccer 2-3 times a day, every day, okay? Because I was on the soccer team many years ago. But nowadays, I play soccer for an hour or 2 on a Saturday and a Sunday, and it takes me 3 days to recuperate. I fall down and hurt myself. It takes me 2 or 3 weeks to recuperate. Okay? I'm having a hard time with the getting older part. So, John, let me just a tidbit to add on to that. John, unlike you, okay, you're younger, and I'm not insulting the fact that you're younger. You can screw up all you want, and you still have time to fix it. If I screw up, I don't have the luxury of being wrong. The amount of money I have, if I screw up, hey, welcome to Walmart. How can I help you today? Oh, would you like paper or plastic? That's not in my future, brother. No, thank you. I have enough to live comfortably at 1% every week. Now, if something screws up with that, I'm going to have to go back to work and add to my little nest egg. Okay? So you're right in one aspect, but yet wrong in another. So at your age, yeah, go balls to the wall, swing for the fences, that type scenario. But for someone in my situation and other people in my situation where we're retired and we can't do what we used to in our 30s, 40s, and 50s, okay, Remember that scenario earlier? Tick, tock, tick, tock, tick, tock. Yeah, you can't beat it. You can't ignore it. You can't make it disappear. Okay, it is what it is. Pacific Gas and Electric, PCG. Check voila. Let's take a look at PCG and see what that says. PCG. Interesting. Ooh, interesting. Check it out. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up. What's going on here? So we want to take a look here. What's going on? We're at 1398 at the moment. The high of the year, 22. The low of the year, 13. So 22 to 13 is a $9 drop. $9 drop on a $22 stock is a 30% drop. So if you're not ready to play a game where something you buy drops 30%, maybe this is not a game for you. Okay, because that's stocks do. That all they do. They go up, they go down. You're going to buy it, it's going to drop to the floor. And on the other hand, you're going to buy something and it's going to shoot to the roof. It's just part of the game. All right, so interesting. Let's take a closer look. So if I can buy this at $13.98, let's call it 14. The 14s are going for 32. Now, 32 cents on a $14 stock, I know it doesn't sound like a lot of money. Some of you probably thinking to yourself, 13 cents, do I really want to do something for 13 cents? Well, here's the thing about 13 cents. It doesn't sound like a lot. No, not one 13 cent doesn't sound good. But when you have 10, 20,000 of them at 13 cents each, then it changes. So let's do a little math using this one. Just to give you a rough idea how the whole thing works. So from beginning to end, well, number one, do you know who PG&E is? That's number one. Number two, I'm going to explain something, and then you're going to need to ask yourself, does it make sense? So let's go through the motion, and after we go through the motions, I'm going to ask you, does it make sense? So, number one, we know who PG&E is. Okay, big company. Okay, can't argue the facts. The high, the low, where was it, where is it? Look at it, jumped up, dropped, jumped up, dropped, now it's going up again. Okay, great. Now, I could sit here for hours and do this. Oh, look at this, up, down. Ooh, great, another little up, down. Another one, now here. I could do that all day long. No, I want just the rough outline. Just the rough outline. Up, down, up. That's all I need at this point. Because the next point is checking out the numbers. Now, we already checked out the numbers. Currently, $13.98, the closest strike price is the 14. 14 is going for 32. 32 is more than 2% of 14. Because what's 1% of 14? 14. Okay, 1% of $14 is 14 cents. Right? Okay, 1% of $1 is 1 cent. Well, you multiply 1 cent times 100, now you got $1. You multiply 14 cents times 100, now you have $14. Same thing. You take it the decimal point and move it up two places. Okay, so 32 is more than 2% of 14. So let's take a quick look and go through the whole thing and see if it makes sense. You ready? All right, so we know who PG&E is. We got the high a year ago. Need glasses for this one. A year ago, we're at 18.15. The high of the year is actually a double high, 21.74. That was the end of November. Okay, well, from there, she drops, goes sideways for a bit, drops again. Here's our 30-day bottom. I want to go all the way to there because this is the last 30 days. Okay, last 30 days. 30-day high, drops, 30-day bottom. Now, from 13 to 14.30, that's $1.30. Well, $1.30 on a $13 stock, that's 10%. 10% jump. Well, today she started pulling back. So this, right from the top, is going to be a no. Sorry. Drops, shoots up 10%. You can bitch, moan, complain all you want. From the bottom here, 13, to where we were Friday, $14.30. The difference between the two is $1.30. Now, $1.30 is not a lot of money, but $1.30 on a $13 stock, because that's where it was. It's at 13 right there. She jumps up. That's over 10%. Anytime a stock jumps 5% or more, it is susceptible to profit taking. Now, some of you might be thinking, no, I'll keep on to it. Yeah, you probably will, because there are seats. Hold on. There's an ass for every saddle. There's an ass for every chair. There is. Okay? Stock jumps up 10%. Me and a whole bunch of other people. I'm only here for the money. I'm not here to walk down the matrimony aisle with PC&G. Do you promise to love, honor, obey, and keep this to the day you die? Hell no. I want to get my profit, get the hell out, and move on to the next one. Because the stock going up does absolutely nothing for me paying my light bill, or for me paying my phone bill, or for me paying my gas on my whatever. It does not help me pay my bills. I'm 61 years old. I'm retired. The money has to come from my investments. So whether you listen or not, hey, that's up to you. Whether it makes sense or not, well, that's up to you too. But just for the fun of it, let's pretend we're going to buy it at 14. That's where it is now. So let's just get out of this. And we're going to do a covered call at 14 because that's where the stock is at the moment. Here's the 14 right here. Now, one thing I like about Think or Swim, it's not mine. I don't own any of this. This is Charles Schwab's. Okay, you just give them a call. They'll let you use it for free for a while. Tell you, don't get sick. It doesn't help. See, the older you get, the longer it takes to get over a sickness. Now, I was sick last Tuesday or Wednesday, and I'm still feeling it. And this just doesn't want to stop. All right. So the one thing I like about Think or Swim, I can pick any trading strategy I want. Right there. See them all? These are all the different trading strategies with stock options. Okay? I can pick any one of these, and it sets it up for me. So all I have to do is just decide how many shares I want to buy, how many contracts I want to sell. So I want to do the covered call, because the covered call is one of the safest trading strategies there is. It is safe so safe they say you can do it in your IRA. Seriously, you can. Certain trading strategies you cannot do in your retirement account because the government consider it being too risky. Well, they don't consider a covered call as risky. It's very safe. So what happens here? What happens here, I buy the stock and then I turn around and I sell it to someone else for basically the same price I just paid for it. So let's do one and you'll see how it works. Now, I said the 14. The 14 is right there. See it? Here's the 14. And this is what I'm buying it for right there, 1367. Now, I'm only going to do one contract so you see what one contract costs. And then you can decide whether or not, hey, I can do 5. I can do 10. I can do 38. All right, now I always change it to the market. And the reason why I change it to the market as opposed to a limit order, because you do have your choice. A limit order, you get to choose what you want to pay. Okay? This is what I want to pay and no more. Or if you're selling, this is what I want to collect and no less. That's called a limit order. Now, a market order is totally different. Okay? A market order is, hey, give it to me now. I don't care what it is. That's what I want first thing tomorrow morning. And there's a reason for that. When I'm doing a covered call, the option and the stock are tied together. I know exactly what I'm going to make, roughly, okay, before I even do the trade. Remember I said simple, safe, predictable? Okay, so let's go back to the dividend stocks, and they go up in value. So if you knew the stock was going to go up, most people say, I'll buy the stock. Well, great, but just buying the stock, even though you know it's going to go up, there's no profit there until it moves and until you sell. So just knowing that a stock is going to go up is only part of the equation in that scenario. But this scenario here, right? So I had an idea the stock's going to go up based on historical performance because that's what is part of my equation. That's what I'm looking for. So here, if I buy it at $13.98, whatever it is, and sell it at 14, okay, I'm going to buy one covered call, PCG 100. That means it has weekly options. 1 August 25. Well, that means it's the first day of August 2025. That's this Friday. That means this option is going to expire this Friday. The $14 call option, which means I'm going to sell it soon at 14. So I'm going to buy it, whatever it is. Then I'm going to sell it at 14. At the market to open to open. Now, the reason it says to open is it's 2 orders. I'm buying the stock and I'm selling the option. 2 orders. Okay, I'm buying the stock, New York. I'm selling the option, Chicago. Okay, Chicago Board of Options Exchange, Chicago. New York Stock Exchange, New York. Okay, so let's do a little more reading. Maximum profit, $36. Whoa, $36, whopping. Okay, no. See, here's the thing. When it comes to profit, to figure out your rate of return, you got to take the profit and you divide it by your investment. I have a little bit of tidbits to add to that. You ready? But let's go right to the calculator first. Get the calculator out. My profit is $36. $36, okay. See the calculator? 36 bucks right there. We're going to divide that by the cost of the trade, including commissions and fees. This is my investment. Now, I'm calling it an investment and not a cost because it has a different mentality to it. You know, I'm investing, not paying. Paying sounds bad, where investing sounds positive. Anyway, so my investment is $1,364. But what is my rate of return? You take the profit, hit the divide sign, and you put in, what is it? The investment, $1,364. Now it comes to a grand total of 2.63% for 1 week. Or should I say, for 4 days. Because this option is expiring on Friday. So if I buy this thing first thing tomorrow morning, $13.98, I sell it to someone else at 14. I make that money right away. That goes directly to my account first thing tomorrow morning. So a market order will be filled at 9:30 a.m. By 9:31 a.m., I will have bought my stock, sold my option, and that $36 will be in my account. Now that's for each contract. Well, one contract is $1,300. Well, let's say I put in 30,000. 30,000. Okay, now I got like 33 contracts. Well, what's 36 times 33? That's over $1,000. Okay, so here's where it gets really interesting. Now, a lot of people are scared about investing in stocks because they go up and down, up and down, up and down. Well, let's say, hypothetically, we change our thinking. All right? Change our thinking a little bit. Let's say this is a used soda machine. $1,300 for a used soda machine. Well, what do you do with a used soda machine? Well, you take it and you put soda in it and you put it on the corner and you hope people come by and you buy stuff. Okay, so great. All right, so I paid $1,364 for this used soda machine. Well, this week the used soda machine gave me $36. Okay, that's 2.6% return. What is that at the end of the year? Because remember, there's 52 weeks in the year. So let's multiply that by 52. Now, this doesn't mean you're going to get 2% every week. But I'm just giving you for instance. Okay, that's 137% for 1 year. So let's say this used soda machine, you put it on the Main Street and Springfield Street. Okay, Main Street and Springfield. You put it there. This week it gives you $36. And then the mayor calls you up or someone in your town says, dude, you got to move this thing. Great. You pick it up, you move it across town. You put it on Spring Street and Grove Street, in the corner. Okay, right next to the barber shop. Well, cool. Well, now the location changed. A week has passed. Okay, stocks go up and down. Location changes. Different amount of people going by. Different traffic. So now you might make $30. So you take it and you move it again. Okay. Now, What never changes is the cost of your investment. It's always going to be $13.64. The only thing that's going to change is the weeks go by and you make a different amount every week. So this week it's $36, which is 2.6%. Well, I would love to get 2.6% every week. I don't. I average about 1.4 average. Okay. I'm looking for my Tums. Oh, here we go. This will work. So anyway, think of it that way. Think of it as not a stock. Think of it as a cash producing asset. A weekly cash producing asset. So the only thing that changed on a weekly cash producing asset is not what you paid for it. Okay? Because that never changes. What you paid for a stock will never change unless you dollar cost average. Okay, or add more to it. Then it will change. But for the most part, you buy just 100 shares at $13.64, that number is never going to change. But what will change is how much you bring in every single week, because it will change every single week. Okay, very rarely is it the exact same every single week. So the question would be, there's a bunch of questions, but the first one would be is, does it make sense? We know who PC&G is. We know who they are. We know what they do. Okay? We know if I buy 100 shares, it's going to cost me this. This is the profit I'm getting this week. Okay? What is it going to be next week? Well, that we don't know. But here's the thing. Remember I told you my 9-year-old daughter wanted to learn how to trade? Well, most adults don't understand it. So to teach a 9-year-old, I had to come up with 5 criteria. First one, it had to be simple. Second, safe, predictable, consistent, and no way for her to lose. Ugh, fuck. Pink chalk. Ooh, don't get sick. This new stomach flu, it ain't any fun. I was vomiting for 2 days, and then the last 4 days, it's like, oh, my stomach just hasn't been back to normal yet. It just keeps producing gas over and over and over and over. It's a horrible situation. So anyway, question 1 is, does it make sense? Question number 2 is, do I like PC&G? Question 3 would be, do I like it at this price? Okay, so if I like it at this price, well, am I willing to buy it and hold on to it for as long as it's going to take in order for me to continuously get a weekly cash flow from it? And am I willing to let it go if it hits my target? Well, what's my target? Well, if I paid $13.98, my target is 14. So if I sell it at 14, come on in. Hey, look who stopped by! Rocco!
What's going on?
I'm explaining. You all remember Rocco, right? My son, my old son. Look how fucking tall you are. What the hell?
I'm wearing shoes.
Were you wearing heels?
No.
Yeah?
No.
This is not fun. It's no fun getting old. I used to be taller.
Here, I'll step down off the carpet for you. Is that not?
No, I went this way. See? Yeah, that's better. All right, so anyway.
We're just coming by to say hi.
Oh. Did you guys have fun?
Preoccupied.
Matey, you want to come and say hi? You on camera? Say hi to everybody. My daughter-in-law to be. Come on in. Come on in. Come on in. Come on. Say hi to everybody. Say hi, everybody.
Hi, everyone.
We got 9 different channels going. Yeah, you got 6 here, and you got 5 down here. Wait a minute. 5 down here. That's 11.
All right.
So my adding is not the greatest in the world.
I see that. And yet you're here talking about numbers.
Yeah, I know. Isn't that weird?
Well, I'm going to let you get back to this. I wanted to come say hi. I haven't seen him in a little over a week.
Yay! All right, see you later. Hi, honey. Did you have fun?
Mm-hmm.
Did you have fun? How was Joey?
He's good.
Joey's good?
Very good.
Cool beans. You missing my little buddy? We'll see him soon.
Hopefully.
Cool beans.
We work a bunch this week, so feel free to come grab them.
Oh, I was going to ask you to come up and help me put TV up, a new one.
What day?
I don't know.
Well-
Coordinate with Julie when you're available.
Coordinate with Julie. Okay.
Oh, she runs the schedule.
I'll talk to you later. Bye.
Hi. All right. Where were we? Okay, so anyway, does it make sense? PC&G, it's been around for a while. The people over on the West Coast knew it is. Us guys over here on the East Coast, we're clueless. Okay? But if it makes sense, 2.6% every single week would be nice. I'm looking for 1% a week. I'll take 2% every week. No problem whatsoever. So let's keep on going. And what do we have? All right. No questions over here. All right. All right. So let's keep on moving. Now, PC&G, not bad. Now, I'm not going to buy it only because the chart is telling me it's not the right time to buy it. Remember what I told you when it comes to the chart? The chart always tells me, is it the right time to buy or should I wait a little bit longer? Okay, 30-day high. Here it was. Then she dropped. Now she's back up again. What's going to happen next? Usually what happens next, it usually drops back down again. Usually. So I'll put PC&G for 2 weeks from today. What do we have for 2 weeks from today? PC&G. That didn't help out at all. Don't you hate that? You take a medicine and it doesn't help out at all? Okay, so let's keep on going. Mikey wants to take a look at Honeywell. All right, let's take a look at Honeywell. Now, Honeywell's on my list this morning. And it came up as a big no. Now, the reason why, high, low, where is it? Look at the motion. Up, down, up, big drop. Now, this I kind of like. Let's zoom in and I'll explain to you why I like it. Because Honeywell is one of those companies, it's a government contractor, so they're never going to go broke. It is what it is. All right, high, low, where was it? Where is it? Look at this. Up, down, up, big drop. Now, we had the bottom on Friday. So today is one day to the upside. I love big gap downs along with a huge volume. The blue lines in the back, that's volume. That's how many shares are trading during the day. So if there's a lot of shares trading during the day and there's a big, huge drop, well, there's usually a big bounce after that. So is the bounce right here. It started today, 225, not quite right, but we will keep our eye on it tomorrow and the next day. Okay? John LL Beast Mode, tax incentives. Thank you, John. If you're still paying taxes, someone is not telling you something. Oh, Alex, this is great. Thank you. John, good evening. Nicklear, good. Latari, good evening. JFM, good evening. Uh-oh. Now, I haven't heard Coney in a while, the Brown Tribe. Well, let's take a look at Coney. Pierce, Stevie, what's happening? Stevie Pierce. Okay, so the Brown Tribe wants to take a look at Coney. C-O-N-Y. Now, I understand people like certain things. Well, for illogical reasons. That's like why, what's his name likes, what was that? MSTY. Because of the high dividend yield. Not taking into consideration, like, where the hell's that money coming from? Nobody can pay out more than 100% of their earnings and expect to survive. Well, the company's not even 2 years old yet. But Coney, kind of the same thing. How long has Coney been in business? Well, 2023. Okay, the very first one, 2023. Well, let's look at the numbers. The very first one is 120. So it goes from 120 to 107. Well, that's backwards. Went to 124, 126, 107, backwards again. 166, 227, 228, that's backwards again. 169, that's backwards again. I'm going to say no to Coney. Because when I'm talking about consistency of profitability, let me explain with numbers. All right? This is my idea of consistency of profitability. Let's take a look at Microsoft for a second. Let's go all the way back as far as we can. 2005 will be 20 years. So 2005, 20 years ago, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice every single number was higher than the previous number? Higher and higher and higher and higher. That, in my opinion, is a well-run, well-oiled machine. Consistently profitable. Year after year after year. See, when you're retired, okay, I know what my mortgage is. I know what my insurance is. I know what my house, I know what my grocery bills are. I know what my car gas is. I know what my entertainment is. I know all that stuff. So if I'm getting, let's say, $1 per share, and then I'm getting 80 cents per share, that's a 20% drop. Now it's like, what the hell? How am I supposed to live on less money? Think about it. Now, a lot of you are still working, so it doesn't really matter. But once you're retired, certain things need to happen on a consistent basis. The money is supposed to increase as days go by, not decrease. So yeah, a perfect example, and there's a lot of companies out there like this. Now, Microsoft is a dividend champion because they consistently increase for more than 25 consecutive years. Consistently profitable. Why the hell would you invest in something that's not continuously profitable? Now, you can do whatever you want. It's a free country. You seriously can do whatever you want. But why? Why would you put your money into something that is proven not to be consistently profitable? Terribly sorry, the Brown man, the Brown tribe. I don't like Coney. Not consistently profitable. No, thank you. Cool Arrow, Andre, what's happening? Yolanda, good evening, Yolanda. Oh, D something. Richie, what's going on? Uh-oh, I missed up. Well, I missed all these questions. Oh, can you do Amazon? Why? Why would I do Amazon? Amazon's never been profitable. All right, we just did Coney. I know won the USA. Okay, creative thoughts on Coney. Gave my thoughts already. Probably feeding into some DeFi. No idea what that means. Yeller, thoughts on modern day long-term sustainability of Altria. Woohoo! Love Altria. MO. Again, a company over 100 years old, consistently profitable. Let's take a look at Altria. Okay, Altria, MO. MO, Altria. High, low, where was it? Where is it? Look at this. Up, sideways. I mean, I could go up, down, but here's the bottom, here's the top, it's going sideways. 58.72. It's going to be a no this week, but let's take a look at why. Because look what just happened recently. Okay, down, up, down, up, down, up, down. So it's actually coming back down again. If you see the slight tilt going this way, okay, stocks go up, take the profits. Stocks go up, take the profits. Stocks go up, take the profits. So it's in profit taking now. So I'm saying another week for Altria. Now I like Altria, I do. but not this week. Someone's acting as a bank. Yep. KJ, absolutely. Hollywood Hustle, how are you doing, brother? Uh-oh. Opinion on XRP. XRP is great for what it is. Okay, it's not a dividend investing stock. So it's great for what it was intended for. But for what I'm doing, it's going to be a no. Julian, SYM. What the heck is SYM? Julian. Well, number one, it's going to be a no. I mean, take a look. We were at 15. Now we're at 55. Now, some of you might say, ooh, that's great. Let's jump on that bandwagon and hope it goes higher. Yeah, you have fun with that. All right, there are too many other companies that fit exactly what I'm doing. Now, you may not know me. That's fine. Okay, some of you may have just stopped here for the first time. But I have nothing to hide. Seriously, I don't. You can go to any one of the bios, find out what my name is, and do your search. You will see that I have videos going all the way back until 2011, 2012. I got over 1,100 videos on YouTube alone. Okay? 800 or 900 videos on TikTok and what are those other ones? I have over 900 podcasts on, what the hell is that one? Anyway, besides the point. So I've been around. I don't hide anything. You can check whatever you want. But here's the thing. I'm not trying to sell you anything. I'm just educating you, informing you of what is possible. So think about it. If you could invest your own money, and it only takes about 10 minutes a day. And you know what? One of these days, I'm actually going to, I think it's a good idea to set a sample of taking a look at some of the stocks I'm looking at so you can see how simple and easy it is. Because I take a look at a couple of things. First and foremost, what did I buy? What did I buy it for? What strike price did I sell against it? Where is it at now? What does that mean? So let's take this for instance. It's at 53.08. So if I buy it at 53.08 and next week it jumps to 59, well, I want to get rid of it and take my small profit. I'm not looking for this. And if you are looking for this, you're definitely in the wrong place. Because this, my friends, does not happen every single day. But you know what does happen every single day? This right here. Up, down, 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 up, down. I'm only looking for 1%. Okay, 1% is easy every single week. All right, SMY, we did that one. SFI, Jim Bob, what is SFI? Hi, Swift Foods, never heard of it. Has no options, it's going to be a no. Okay, Hollywood Hustle, Webull, that's a trading platform. I don't even think they actually trade stock. Opinion on Ethereum and Solana US. Yeah, no, I don't do cryptocurrency. Jim Bob, I think Jeff has been drinking. Okay. Julian, what's your thoughts on Symbiotic? You got to give me the ticker symbol. Okay. I've never heard of it, so I have no clue, so I really can't tell you anything. John, La Beast Mode. KHC, Kraft Heinz, huh? KHC. Ooh, just missed it, dude. Take a look. Okay, here's your top, here's your bottom. She shot up after the bottom of the year. Now, we watched this thing. We watched it drop, 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 drop. We missed this because we were looking at something else. Okay, remember I told you there's over 10,000 different stocks to look at. I can't see everything. So yeah, I missed this one. I watched it fall. I watched it drop. Okay, here's the bottom right here. That's the bottom of the year. You cannot get any lower than the bottom of the year. There it is right there. Shot up, 3 days to the downside. So this thing ain't going to look good until 3 weeks. It's going to take 3 weeks to go from here down to somewhere around here. Because Heinz ketchup doesn't move that much. Again, over 100 years old. Again, over 5 decades of increased profitability. Wait 3 weeks. There's over 10,000 different stocks. What's the big deal? Stock market's been around 400 years. What? You may last another 20, 30, 40 years if you're lucky. I'll be lucky if I get another 20 years out of this little thing here. Okay? I like to get 30 or 40. The odds are against me. Every morning I wake up, I say, oh, what the hell is that? The older you get. I was telling this to my son the other day. Not James, but Jacob. I was telling my other son, I said, we were on the phone. He said, what the hell? No, we weren't on the phone. We're actually outside hanging. A couple of weeks ago, some of you were here for that. Jacob was sorry, Jacob was here. So when Jacob was here, he says, what the hell? What the hell did that come from? I said, what is that? He says, I don't know. I said, well, write it down because that ain't ever going away. Because next year, you're going to go, oh yeah, I remember that one. And then you'll get another one. So when you get older, I'm sure you remember your grandfather. Yep, that's them remembering each and every pain you collect along the way. When I was in high school, I pulled a groin. I was playing soccer even back in high school. And the only goal I ever scored in high school, because I was a defender. I hardly ever got up the front line. But one time, I had the opportunity. And there I was. It was just me and the goalie. I got down, ball right in the net, and the goalie landed on my leg and pulled my groin muscle, and I was out for the rest of the year. Only goal I ever scored in league play. But that pain from 1981 comes back every once in a while just to remind me that I'm getting older. And then the pain in the back, yep, I remember where that one came from. And the pain in the neck, I remember where that one came from. The pain right here, I remember where that one came from. So as I wake up every morning, it's like, let's get these bones all stretched out. Yeah. So as the older you get, everything starts to fall apart. I guess that's what I'm saying. All right, so let's keep on going. Sell the option for the week. Absolutely, Alex. Andrew, can we do Amazon? Why? Amazon's not profitable. Amazon has no dividends. AMZN. There you go. Hell no. Take a look at this run. Up, profit taken. Up, profit taken's coming. Take a look at it. From 160 to 230, that's a $70 increase. $70 on a 160 stock, that's about 30%. 30% jump, and you think there ain't going to be profit taken? You silly, silly child, you. I don't do Amazon because they don't have dividends. You can ask Jeff Bezos. Amazon's not profitable. Amazon's never been profitable. Jeff Bezos will tell you that. Amazon's never been profitable. But they have a lot of cash flow. They don't have to be profitable if you have a lot of cash flow. All right, so let's keep on keeping on. How often do I got my shares called away? At least once a week. Not all of them. Okay, but the idea is jump in on Monday or Tuesday. Make it enticing enough for someone to buy it from you. That way you're collecting that small profit consistently every single week. I've got $20 a week to put into something. Big Daddy Dynamite. What's happening, brother? Do dividend stocks reverse split? I haven't ever noticed a not at least not the ones I'm looking at. Because the ones I'm looking at have been around for over 2 decades. That's over 20 years. See, once you have established yourself at that point, very rarely does it have a reverse split. And Daddy Big Dynamite, you got $20 a week to put into something. Okay, it's not going to be earth-shattering. Infinite Sky, thank you so much. You're welcome. Richie, good example. At 28, I blew 120 on a business and lost it all in 6 months. Today at 41, I got 300. Okay, not a question, more of a statement, but thank you, Richie. Say less time. Can dividend stock? That's the 3rd time you've asked that question. Say less time. Okay, Okay, now I will answer almost all the questions. Now I got over 9 different channels running, so I can't get to every single question. All right. Hey, Hollywood's in the house for shizzle the snizzle. Okay, whatever. Pittsburgh Plate and Glass. Hey, GGG, you gotta let me know what the ticker symbol is because I've never heard of them. Okay, Mike, we already looked at Coca-Cola. Mike, we already looked at Coca-Cola. Heidi, good evening. James, Lane, could. Alex, Lane's like, answer the kind of question. Hell no. Alex, why? Okay, wait a second. Mike Lane, let me answer for him. Hell no. Thank you, Alex. Mike, what's my? Oh, Coca-Cola. Okay. Thanks, Alex. But Mike Lane, we already looked at Coca-Cola. Now, I love Coca-Cola. I really do. It's always, always, always going to be about the numbers. What am I buying it for? What can I sell? What am I bringing in? And what is the chart telling me? Well, I remember the chart for Coca-Cola tells me not this week because they go up, they go down. Well, I'm not 100% sure exactly where it is now, but it was no earlier. Thanks, Mike. Yep, keeps crashing. All right. What stock is this? Amazon. Richie, 100,000 invested at 0.014% weekly. Return average will make you 72,000 before taxes. Yeah. And you make 72% of what you invested in 1 year. That's fantastic. Yep, it is. Hollywood. All right, Eric. Are you doing Procter & Gamble promo for Pepto-Bismol? No, I'm just sick, and I don't like to be sick. Not really sick. I just have. I have no idea what it is. Something. Your son looks a lot like you. Well, thank you, Hollywood. Can you look at Ford, please? Skip, love Ford. I do. Now, 3 years ago, Ford was my #1 stock. It was 4 years ago. High, low, where was it? Where is it? Look at this. Sideways, down, up, down, up. Okay, 1128. The 1150s are going for 23. Well, that's awesome. And look, it's in an upward trend. So let's look a little bit deeper because it looks like it could be good. Sophia, one of your YouTube channels has a crackling speaker output. Yeah, I've heard that. Sorry, Sophia. I bought a brand new computer and it's been sitting in the other room for about a week because I've been sick and I can't bring it to the Geek Squad to have them take everything from this computer, put it onto the new computer. Yeah, just because I know how to stand in front of a camera and see, I've been trading for a couple of decades. So the trading part is easy. Standing in front of the camera, that part's easy too. Reading the questions, that part's easy. You want me to figure out how it works? Yeah, hell no. Sorry. I got to draw the line somewhere. So my 2 sons are eventually going to come on board and help me out because when I told them, okay. See, both of my sons, I've been waiting for my children to mature and get to that point in life where money actually has more meaning to them. Because in them growing up, they basically had everything they ever wanted. Okay, they had their own rooms. They had their own toy boxes. Now, the reason why I say that is I grew up with 5 brothers and sisters and a single mom. So there was 6 of us living. Okay, 6 of us living in a 2-bedroom house with 1 bathroom. We shared a toy box 2 feet by 2 feet. 6 kids with 1 toy box. Okay, so for Christmas, we got 1 or 2 toys. That was it. Yeah, baby, in the house. So my life growing up and my children's life growing up, totally different. So they basically had everything growing up until they turned 18. Well, my son, when I was just here, when he turned 18, he came home from school one day and all his shit's at the end of the driveway. And it's like, what's going on? You're 18. Okay, that's the difference between my generation and the new generation. Okay, the new generation will let the kids stay in the house for as long as they want. Hell no. You're 18. You're a man. You can vote. Yeah. Yeah. So needless to say, as cruel as it was, it didn't take him long. Pack up his stuff. He went and hung out with some friends. And he bounced around from couch to couch to couch until him and a bunch of his buddies got together and got their own place. And then they slowly learned the adult responsibilities. Teach a kid to swim, throw him in the deep end. Sink or swim. Okay, what was it? The Spartans? They take the kids and they put them out in the wilderness. Yep, make your way back home. That was it. Okay, so my children are at that point where I said, all right, I am now at a point where I can't continue to do this by myself. And I'm admitting it, I can't, because I have too many channels going, too many people following, and too many questions to answer. And this is not a business, this is just a hobby. But my children see what's coming in, and they realize, well, I now have to pay someone to do this. And my son's thinking to himself, wait a second. I go to work at a job I do not like and do this, this, and this for this much money, and you're going to pay somebody this just to answer emails and do other stuff? I said, yeah, because I'm at that point. I got to pay someone. I can't do it myself. So my son said, you know what? I'll sign up. I'll do it. I said, great. So very shortly, I'm going to have a co-host, and that will be my son. He'll be Roz. Remember Roz from Frasier? Roz, who do we have next? Well, Frasier, next on the line, we have Tim from Toledo. Tim is having a problem with his ex-wife, and he can't seem to understand what's going on. Thank you, Roz. I'm listening. We're going to have that in a couple of weeks. Hopefully, it will be much better, because I'll be able to answer more questions, and we'll have a lot better moderation. I can get rid of the trolls. Now, I love trolls. I really do. But if you're going to be a troll, come up with something that has some meat and potatoes to it, some gravy, something really good. If you come up with the normal stuff, nobody gets 1%. Well, yeah, people do get 1% every week. Okay? Nobody can do that. Yes, we can. If there is a will, there is a way. If there is a way, someone's found it. Okay, so let's keep on going. So we're just, let's keep on keeping on. So Sophia, yeah, I understand that. And like I said, the new computer will be up, hopefully. Hopefully I can get it done. Well, because I'm going back up to Maine for a week next Saturday. Okay, so this week. So 1st of August, I'll be up in Maine for a week. So I'll be broadcasting from there. It won't be as lovely as this. This way it gives my son a week or two to get his studio ready to go. But, yeah, I'll be up there for a week. When I come back, hopefully in the next couple of weeks. Hopefully by the fourth quarter. Because by the beginning of the fourth quarter, because at the end of the fourth quarter, I'll have a full 2 years of documentation and live videos of every single trade I do. So in order to open up the hedge fund, which I plan on doing, which I'm going to be guaranteeing 20% per year for whoever wants to invest, that's not bad. Guaranteed 20% per year, great. But here's the thing. After December, once the new corporation starts, I can no longer do this because it's against the law for a corporation selling, what do you call those things? Securities to advertise in this manner. But at this point right now, you guys are all sharing, you always get the information, so you know what I'm doing. And then next year, I won't be able to do this anymore, but I will have a live corporation that will have its own shares, and I do guarantee 20% on the dividends, and I do have bonds, and those also guarantee 20%. But that's next year. But I need to finish this full year first. Okay? This will be, at the end of this year, it will be a complete 2 years. Yeah, so Sophie will take care of that. Grant, do you like Realty income? Ticker symbol O. It's supposedly really consistent. Well, just for you, Grant, let's take a look at it, and I'll show you what I think of O Realty. And you know what's interesting is I used to get O Realty every single week. Someone would ask me about it. I said, really, that piece of crap? Wait a minute. Let's finish up with Ford first. let's finish up with Ford first, and then we'll go take a look at Realty. Okay, so Ford, high, low, was, is. Look at the motion. Up, down, up, down, up. 1128, the 1150 is going for 23. That's more than 2%. So let's quickly go over it and see if it makes sense. Because number one, that's the number one question. Does it make sense? We all know who Ford is. Okay, so a year ago, we're at 1092. We bottomed out at 840, and that was in the second week of April. Now, the high of the year was a double high right there, 1198, back in June and the beginning of July. That's the top right there. But from there, she drops. Now, remember when I said 30-day high, new bottom right there, 3 days to the upside, 1, 2, 3. Look at where we are right now, almost perfect position. Last 30 is right about there. Okay, here's your last 30. 30-day bottom, 30-day top. She comes back down. 1, 2, 3 days to the upside. We're right here. So let's take a look at Ford at 1150. Okay, so let's get rid of this. Let's go right here. Let's go to covered stock. The 1150 right there, and one contract. All right, at the market. There we go. There we go. Confirm and send by one covered call of Ford 100. That's the weeklies. 1 August 25. That's this coming Friday. The $11.50 call option against Ford at the market to open. Maximum profit $45 per contract. $45 per contract. One contract is $1,100. So calculator, if you please. Clear that. $45.50 divided by my investment, $1,105. Grand total of 4.1. I'm right. I got a big fat chunk of money, and guess what I'm buying tomorrow morning? So here's the thing. I like Ford. Ford's been in business for over 100 years. They have not increased their dividends consistently for 5 decades. They haven't. So why am I buying it? Well, it's Ford. It's an American icon. Are they going out of business? No. I only worry about companies going out of business when they start decreasing the dividends and they start doing things in the market that makes it look not as stable. Okay, so if I'm buying it tomorrow at 1128 and I'm selling it at 1150, you know what? Let's try the 11s. Because the 1150, the stock has to go up, but the 11s, the stock don't have to go up. So let's see what the 11s look like. Let's edit this. And I want to change this right here. The 11 right there. And, okay, it's just a little bit different. Okay, buy one covered call, Ford 100, that's the weeklies. 1 August 25, well, that's not changed. But what has changed, the $11 call option against the Ford at the market to open, blah, blah, blah. But look at my profit now is only $21.50, but it's only costing me $1,000. So let's figure out what that's going to be. And I want to show you something else, and you're going to say, holy shit. That's what you're going to say. You ready? Calculator. Why did I take my glasses off? What the hell was I thinking? All right. So the profit here is only $21.50. 21.50, and the investment is $1,079 divided by 1,079 gives me a grand total of 1.99%. So here's an interesting question for you. Do I do the 1150 and pick up 4%? Or do I do the 11 and pick up 2%? Now, a lot of you probably thinking the 1150 because you get more money. Yeah, you do. And if it goes up above 1150, you get the difference between the purchase price, 1128, and 1150, which is another 22 cents on top of the 45 bucks. It's more profitable. But here's the thing. The stock has to go up in order for that to work. Now, don't get me wrong, I'm still getting the premium, I'm still getting the 4%. But if the stock doesn't continue to go up, if it stops right where it is and starts going back down again, okay, and it never hits 11.50, well, I will continue to own it at, what is it, 11.28. But if I buy it at 11.28 and sell the 11s, well, if the stock goes up, I win. Stock stays the same, I win. Stock comes down a little bit, I still win. And I get all my money back, and I don't have to worry about the stock, retrace or anything like that. I can get in, I can get out, and I still get profit. I only get 2%. But am I okay with 2% as opposed to 4%? I would prefer safety over profitability. Remember I told you earlier, I don't have the luxury of being wrong? Think about it. I don't have the luxury of being wrong. I don't have the luxury of making mistakes, having to backpedal and try to figure out, what am I going to do with this stock? It pulled back. What am I going to do? I would prefer take the 1.99% and just say, you know what? It's 2%. Great. It's a lot more than I thought I was going to get. All righty then. Here's something some of you may know or may not know. This number here, buying power effect. Now, if you're new to investing, more than likely you're going to be asked, do you want a margin account? Do you understand what a margin account is? If I put in $100, a margin account, the broker will put in $100. So now I have $200 to play with. No, you don't. You have $100 of your own money. That other $100, that belongs to the broker. You're borrowing that, and you have to pay for the privilege of borrowing that. That's margin money. That's someone else's money you're borrowing, that you're investing. So if you're wrong, not only do you have the possibility of losing your money, but you're losing someone else's money. And that's a no-no. Because in margin accounts, if the stock goes up $1, you make $2. That's awesome. But if you're wrong and the stock goes the other way, instead of losing $1, you lose $2. So it's a double-edged sword. Now, as beginners, I tell everyone, stay away from margin until you understand the risks involved. Now, I've been trading for over 20 years, so I understand the risk. And yes, I do have margin. But I got my ass burned a bunch of times using margin, a bunch of margin calls. Well, you got to learn how to use it. Okay. Now, I used to invest 90 to 95% of all my money at all times. Well, nowadays with DTS or TDS, that's Trump derangement syndrome. Anytime that idiot says something stupid, the stocks drop. Well, yeah, he did that in April, and I got, I think, 3 or 4 margin calls. So now with him in office, I got to be a little bit more leery on how much margin I spend. But I do still use margin. So what I'm going to do now is I'm going to show you the rate of return using margin money as opposed to using all cash. Because some of you don't want to use margin at all. And there's nothing wrong with that. Use all cash. But I have no problem whatsoever borrowing money at 8% and making 30, 40, 50% per year on it. I have no problem with that whatsoever. Because I've been doing it for so long, I know a lot of the ins and outs. I know a lot of the strategies to keep me from losing. All right, so that being said, send that back this way again. All right, here it is right there. Oh, where did you go? Uh-oh. Where is it? Right there. Bye. Tra-la-la. All right, let's edit that to just one contract. One contract. There we go. All right, same thing, 45 bucks. Okay, $1,105. Remember what that price was? That was a nice hefty price, wasn't it? So let's take a look at as margin money. It's the same thing. You take the profit, okay, 45 bucks, divided by the investment. Now, all cash, the investment would be $1,105. But on margin, it's 540 bucks. for one contract. So let's divide it out. Okay, divide $541. And that comes to a grand total of, you ready for this? 8.3% for 1 week. Most people say I can't get 1% every week. There's a lot of people who say that. Every single night, someone says, you can't get 1%. Nobody gets 1% every week. Okay, they don't. But here, this opportunity here, we're talking about Ford. 8.3% for 4 days. Because Monday's already gone. So we have Tuesday, Wednesday, Thursday, Friday. 4 days left. That's it. So I had no problem whatsoever getting 8% for 4 days. All right. Let's keep on keeping on. What else do we have? Oh, Grant wants to take a look at Realty income. Oh, Realty. Let's get out of that. Are you ready? Who said this? Grant. Grant. Oh, Realty. There it is. No. Wasn't that simple? What I think about O Realty? No. The reason why I'm saying no to O Realty, 15 August, 19 September, 19 December, 16 January. Do you notice those are all months of the year? Okay, that means that O Realty only has monthly options. Monthly options just don't work. The numbers just don't work for me. Now, I'm not trying to dissuade any of you guys to buy O Realty. If you like it, fine, buy it. I don't do it because it just doesn't work for my style of trading. Sorry. Alacran. All right, we already looked at Coca-Cola earlier. Okay, the numbers just didn't look right. The numbers look good, but the chart didn't look right. Sorry. Numbers looked great for Coca-Cola. The chart didn't look good for Coca-Cola. So Coca-Cola was a no this week. All right. Where are we doing? Where are we? Oh, wow, I missed all these questions. All these questions. Oh, wow. Dividend King, there we go. Okay, did that one. K-Van, good evening. Okay, No Lopez. Can you art? I have no idea what it means. Can you do ARR? What the heck is ARR? ARR. No, it's a monthly. I don't do monthlies. They just don't work for me. Okay. Scuddy, RCL, Royal Caribbean Cruise Lines. RCL, is that right? Royal Cruise Line. Hell no. Look at it. I don't ever buy at the high of the year. Nope. Ooh, Jojo wants MasterCard, MA. Ooh, wait a second. I don't know, that's a tough one. What do you think? Take a gander right here. A 30-day bottom, up, down, up. Yep, is that a new 30-day high? Yeah, no, thank you. Sorry. Crypto. I keep Altria as my foundation and trade options to feed more shares into it. Crypto Vapor, it sounds awesome. Great plan. I love Altria. Zeke's World, TSLL. Okay. TSLL. There you go. High, low, was, is. Look at the motion. Up, down, up, down, up. Where are we here? 11.95. The 12s are going for 46. That's over 4%. If you like TSLL. Isn't that something against Tesla? Direxion Daily Tesla. Yeah. Tesla's another one. No dividends. Okay. Ronak Patel, Verizon, VZ. Interesting. High, low, was, is. Look at this. Up, down, sideways. We're at 42.36. 42.50 is 24. I'm going to say no. The numbers aren't looking good. Sorry. What the hell were you doing last night when I was in poker tournament? Sleeping, more than likely. QBTS. What the heck is QBTS? QBTS. Oh, D-Wave. No. Okay, if this thing was at $1 last year, there's no possible way this thing can have 2 decades of increased profits. Because I remember when I did this. People were asking me in January and shut up like this. No, I don't want to be involved. Okay, there's no consistency, no historical pattern. Terribly sorry. AVGO. AVGO. Hell no. I don't buy at the high. Club Med Tom. Hi, James. Got into Lockheed Martin on the 14th at 473. Received 1,100 in premiums since, but LMT dropped to 422. LMT. Now, Club Med Tom. Alrighty, so you got this thing at 473 on the 14th. Okay, here's your 2 days to the upside. On the third day was a down day. I don't know. Let me zoom into that before I pick on you a little bit because you've been here long enough. Okay. All right, Tom, you ready for this? Now, I don't want to put salt in your wounds, but I kind of do. Anyway, remember how I tell you I look for a 30-day bottom? Well, this is the 30-day bottom, I want 2 days to the upside. And then on the third day, I will jump in. Day 1, day 2 to the upside. The third day, I want it to be higher than the close. Didn't happen. It decided to pull back. So now that you're into it, well, how can we fix it? You got a couple of opportunities here. Opportunity number 1. Well, here is a great place to do dollar cost averaging if you have that ability. If you don't have that ability, well, you got no other choice other than selling strike prices below your purchase price. Either that, sit back and wait for it to retrace, because it is going to retrace. Here's your 30-day high here. You have a big gap down, and then you have a huge volume spike. Look at the average volume here. Well, look at the volume spike here on the day it dropped. Now, is that sellers or is that buyers? That's one thing they never tell us, because the volume not only doubles, triples, or quadruples, but who is it? Is it buyers looking to get a bargain, or is it sellers panicking to get out because they think the world's going to end? I don't know why the hell they think that. It's Lockheed Martin. They've been around for a very long time. Government contracts. You know they're corrupt. You know they're getting money. So yeah, here's the bottom here. They call it a dead cat bounce. She drops and then she bounces back up again. Well, that's what it's doing. So now you have to ask yourself is, where do you think it's going to be by the end of this week? Do you think it can hit 440? Well, the 440s are not even on here. They're not even on there. Okay. So the 440s right here, do you think it can hit 440 by this Friday? It's only offering 25 cents a share. That's horrible. But it goes back to my cow analogy. If you buy a cow and it gives you a gallon every week, well, you're happy, you get all that milk. What happens when she loses some of her potential, and now she's only giving you a quarter milk? So you're used to getting a gallon of milk up here. Now down here, you're only getting a quart. Do you get rid of your cow? Or do you say, you know what? Let's hold on to it. Hopefully she'll get better and she'll go back up to where she's supposed to be. If you take a look at it from a different point of view. Now the different point of view looks something like this. Number one, do you like the company? If so, buy it. And then every 90 days, you'll collect the dividend, whatever the dividend is for Lockheed Martin, every 90 days. So you're going to collect the dividend every 90 days because you own the stock. But now you have the opportunity to bump your dividends up a little bit by selling a covered call. So let's say this week you sell the 450s. All right, you bring in 10 cents a share. That's 10 cents a share every single week. Now, what if you do the 432s? Well, that's 70 cents a share. Oh, the 432s are right up here. It's a little bit closer to where the action is. Okay, now you got a couple of choices. You can sit back, relax, and just collect the dividends. It's Lockheed Martin. They ain't going anywhere. Okay, that's number one. Number two, you have the opportunity to collect a premium, whatever one you pick, as long as you're comfortable with what you choose. It still allows you to bring in some money and still simultaneously be able to sleep at night. All right, so no more stocks. I'm going to finish answering questions because it is almost 11 o'clock. My 2.5 hours are just about done. So let's see what kind of questions you guys have. Holy cow, you got a lot of questions over there. AVGO, we'll take a look at Walmart. You promised the last 2 weeks. We looked at Walmart last night. Seriously, we did. We looked at Wally World last night, WMT. WMT. Wally World, there you go, right there. Okay, there's the high, here's the bottom, now she's shooting up. Now we talked about this one yesterday. 3M, ooh, I have to take a look at that one tomorrow. Everybody's heard of PPG, yep. Thoughts on Coca-Cola? Mike, we already did Coca-Cola. Willie 2, I got 10 grand. I'm looking for stocks that pay dividends and income. 60 years old and playing catch up. I'm 61, Willie. Just drop me your number. I'll give you a buzz and we can chat. Cake. Okay, Mark, I'll take a look at that one tomorrow. Uh-oh, how do I feel about SCHD? Ooh. You might want to check out what the dividends look like and see what you think. PASS. Well, let's take a look at that one. Bogla tomorrow. Sinbad. Baking soda with water will be gas release, as in burp the baby. Yeah, I get that. Okay, we already did that one. Rich Dad, Poor Dad. Speech. You like that one? Rich Dad. I love Rich Dad, Poor Dad. I don't listen to him anymore because he doesn't have anything new to say. You know, I will listen to someone, but when they start repeating themselves over and over and over again, which I'm surprised because I keep repeating myself over and over again. Can I do your co-host for free? It's an honor. Rogelio Casas. Well, number one, I've never talked to you before. Okay. Number two, I have no idea who you are and what you're looking for. So what I always tell everybody, if you want to have a conversation, I love talking to people. I really do, especially when it comes to investing in stocks, because I was brought up dirt poor. I'm talking dirt as poor, really. My hand-me-downs were hand-me-downs. Okay, so my sister was the oldest. She got all brand new stuff. Then it went to my brother. Then from my brother, it went to my other sister. Then from my other sister, it went to me. Then after me, my little sister didn't get anything. My littlest brother got all the new stuff because he was the baby of the family. So the oldest one in the family and the baby of the family get all new stuff. Who gets all the used shit? Me. So my very first bike, I had my very first bicycle when I was 10 years old. Okay? My very first bicycle didn't have a chain. I lived on a hill. So I'd push that thing to the top of the hill and I rode it down. Okay, brakes, I used my shoes. And I put my feet down. I got these holes in my shoes. My mother used to always yell at me. So I know what it's like to be poor and have absolutely nothing. Growing up in the 60s and 70s was a totally different world than what we live in today. But here's the thing. I have no problem whatsoever sharing what I know to help out the little guy. Now, my assumption is nobody's rich here. Why would a rich person be here listening to me? We're all struggling. We're all trying to get by. It's not that difficult. It was created for my 9-year-old daughter. When she was 9, she says, Daddy, what are you doing? Can you teach me? So for a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. That's for my daughter. That came with 5 rules. Rule number 1, never buy something not on the list. Well, we told you what the list was. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Number 2, never sell at a loss. Defeats the purpose. Number 3, make sure the company's consistently profitable. It just doesn't make it. That one boggles my mind, because some people will buy crap, literally crap, and say, well, why aren't I making money? Well, if the company's not consistently profitable, if they have not proven themselves worthy, why the hell are you giving them your money? Seriously. 4, weekly options only. Okay, so I'm at that point where I need cash flow. I have no desire, so don't even bother asking about capital growth. A stock, oh, but it looks like it has great potential. I don't care. Seriously, I don't. I have over 300 companies to look at. And the 300 companies I like do exactly what I'm looking for. 20 years of consistent profitability and weekly options. That's exactly what I'm looking for. Why would I look at anything else? There's 10,246. That's about right, 10,246 different companies. I only care about 300. I can honestly care less about the rest of them. I don't care. All right? Willie Long, cool beans. 2.1%. Thank you, thank you. DG, what's happening? All right, DG, evening, James. Have you looked at Intel or Harley Davidson? Ooh, no, not yet. ExxonMobil, no, not yet. Kevo, couldn't you just put it all on JP Morgan at this point? They are the government. I have 7 accounts for a reason. I don't trust the government as far as I can throw them. Nutty, TSM. Let's take a look at tomorrow. Chiron, tomorrow. Jojo, you said you never heard of Pittsburgh Plate Glass. Oh, that's PPG? Oh, yeah, I heard of them. I thought it was just PPG Incorporated. Because if you look on... All right, hold on a second. Hold that thought, Jojo. All right, let's get rid of this. July. Nope, not in July. June. Not in June. May. There it is. PPG. Now, do you see where it says right there? PPG Industries. That's all it says. So, in my whole investment career, it was never Pittsburgh Plate Glass. It was always PPG Industries. That's it. See, I only know PPG Industries. I didn't know it stood for Pittsburgh Plate Glass. But I love PPG. I do. What's the software that you're using? Okay, Nettie, it's not software. It's actually a trading platform called Think or Swim. It's owned by Charles Schwab. Yep, they'll let you use it for a while for free. Okay, they actually do have paper trading abilities. So you could do every single thing that I'm doing, but it's like Monopoly money. Okay? So that's it for the questions there. Yay! Now over here, CIFR, never heard of it. Put me down. All right. Wow. Questions. Wow. All right. I'm going to open up these questions, and that's going to be it. Pepsi stock, down trading, but dividend. Yep. Loading. That's your name, loading. Okay. Yep. I love Pepsi. I do. It's just not the right time at this moment. How does the stock market worth in trading? I'm terribly sorry, New York, Chris. That makes no sense. Okay, you might want to ask that a little bit different. How does the stock market worth in trading? Not quite sure what that means. Explain to me like I'm 5. Okay, New York, Chris, the way I'm going to explain it to you is you have to explain what it is in a better question, because that question didn't make no sense whatsoever. Cajones, what do I think about Coney? I already gave you my opinion of Coney. Can we do Costco? We already did Costco, Infinite Sky. We already did Costco. We already did Costco. What do I think about Coney? You guys keep asking the same questions. Smart, you have two at the same time. Yep, I see that. 2 TikToks. Yep. Please help me. I'm all in on Costco. What are your thoughts? You probably shouldn't have done that. Number one, never, ever, ever, ever put all your eggs in one basket. UNC, should I invest in deep sea mining stocks? I can't tell you what to do, Tran. I've never heard of you. I have no idea what you're looking for. So I can't, in good conscience, tell you anything. Whirlpool, have you done that one? Whirlpool is a monthly optional stock. Sorry, Sarah, I don't do monthlies. Okay, they have. Sorry. Yeah, so I don't do stocks to have monthly options. But thank you for your input, though. Okay, Frizz, we already did Walmart. We already did Costco. Thank you so much. Wait, I don't understand. How do you not have enough to buy 100 shares of Costco? Please help me understand. Well, you do realize that Costco is $900 a share. Okay? $900 a share times 1,000 is almost $9 million. Is that about right? $900 times 1,000. Yeah, that's about 9 million. Yeah, I don't buy anything over $250. I'd like to say thanks for teaching your strategy. It's a good strategy. Thank you, Emeris. Was going to say, who says you can't teach an old dog new tricks? What do you mean when TOS warns that an underlying security is difficult to borrow? Well, that usually, Brian, that usually means that you're trying to short it. Okay, because when you're shorting a stock, you have to borrow it from someone in order to have it available. 900,000. Oh, so Nirvana says it's 900,000. Wait a minute. $900. I'm a damn freaking calculator. $900 multiplied by 1,000 shares. Oh, 900,000. Yeah. Why would I put 900,000 into one company that I don't agree with? The market you're showing is too close to market. It's too wide. You're never going to get price tomorrow. Larry, you're absolutely 100% correct. Okay? Because the numbers I'm showing are the numbers that closed today. So first thing tomorrow morning, all those numbers are going to change. Never once did I say is any of that guaranteed. There's only 3 guarantees in life, Larry. 3, that's it. Death, taxes, and disappointment. Okay, so the numbers are what they are now. But first thing tomorrow morning at 9:30, they're all going to change. Okay? But you're right, Larry. Brian Cook, the screen live shows a mixing program. Does it really? Oh, damn it, don't tell me I did that again. He's absolutely right. Shit. See, why didn't you say that earlier? Damn, that video is going to be useless now, isn't it? MSTY is not accompanied to hedging firms that's using bonds to master. All right, Larry, I like what you're trying to say. I'm not 100% sure exactly what you want me, how you want me to answer that one. Okay, because you basically said MSTY is not accompanied to hedging firm that's using bonds to master. I'm not 100% sure what you mean by that, Larry. I'd love to hear what you have to say. So let's keep on rolling. Mindy, hi, James. Have you already done Dow? We did Dow early this morning. Larry, you got to open up the holdings. Oh, you talking about the holdings on the ETF to find out what they actually own? Yeah, I could do that. Yes, 80K a week isn't enough. Yeah, Joey V, you have fun with that one. Doubled every 10 months. Probably, Larry. What do I think about Coney? Don't like it. Joey V, 100% on Misty. Good luck with that one. Wicked echo on the microphone. Again, this is not my profession. This is just a hobby. Okay, as a hobby, I do what I have to work with. Okay, see, I get the microphones from both sides. Hello, hello. Okay, so how to use them, how to set it all up, beyond me. Mary June, I haven't seen you in a while. Brian Cook, I'll take a look at tomorrow. Infinite Sky, please help me understand how come you can't afford 100 shares of Costco. I can afford 100 shares of Costco. I said 1,000 shares. Infinite Sky. If you heard me correctly, I said I cannot afford 1,000 shares of Costco. Okay, even at 100 shares. 100 shares is $90,000. Why the hell would I put $90,000 into one stock? Because here's the thing. At $900 a share, that's a long way to fall. And I tell you one thing. At $900 a share, 1% is 1%. Well, if I can get 1% on a $20 stock, well, $20 to zero, it doesn't hurt as much. I think it's a psychological thing. Okay? Mary June, yep, thank you. Infinite Sky, how much do you minimize your tax impact? I pay 0 taxes. Okay? It is your right to find whatever ways legally possible to pay minimum or no taxes whatsoever. I pay no taxes. Hey, Hakuna Matata's in the house. All the way from Sweden. No, Switzerland. Switzerland. Yes, Switzerland. B-Teds for life. B-Teds. I have no idea what that means, B-Teds, but okay. Alexander Cameron, thank you. What symbol are you looking at? Walmart. Prilosec is great for the summer. Yeah, I don't do prescription drugs. It's bad enough that I do, antacid. Hope that's not coffee you're drinking. No, it's actually ginger tea with honey for my throat because I'm not used to talking so much. Earnings on page. Okay, Michael, earnings on PCG are on 731. Will you still trade it? Yeah. In Thinkorswim, how can you tell if my call option gets sold? Really? How can you tell? Because it tells you when. Let's go. All right. You'll get one of those. Okay. Everything in red is something I sold. Everything is green is something I bought. That's how you tell if something got bought or something got sold. Next. Thanks for the education. You're welcome. Perm cakes. What do you think about donuts for someone with less capital trying to get tier 1 options? Interesting. We have to take a look at that another day. We're past 11. Interpret. Say, oh, you say, when will I get a job? Can't help you out with that one. ROST, never heard of it. Sir, do you trade options or stocks? Both. Okay, Alex, we looked at Walmart already. Brian, what does it mean when TOS gives you a warning that an underlying security is considered hard to borrow? That means you can't, they frown upon you shorting it. That's what that means. What percentage of your portfolio do you place on each trade? 15 to 20%. 20%? Hell yeah, I'll invest with you. Everybody says that, but only a few people actually step up. You might have a septic ulcer. No, because it wasn't here until I was sick. Okay, I got sick the other day, and it just won't go away. Hey, James, can you check out AEO for me? Chuck Jensen, how are you today? We'll have to check it out tomorrow. We're past my time frame. Sweden. Damn it. Why do I keep saying Switzerland? Sweden. All righty. All right. So I think that. Uh-oh. TSM. You said you never. Yeah. Okay. Got that. What is the software you used? Did that Whirlpool? Did that one? Tiger Twin. What made you start selling covered calls? Ooh, Tiger Twin. I think you've been here before, but here's the story. Quick and short and simple. Now, I've been trading for over 25 years. Okay. For the last 15 or so, it's been strictly this strategy. And the reason being, because it took a 9-year-old to make me search deep, deep, deep for a simple, safe, predictable, consistent strategy that you could almost never lose on. Okay, my 9-year-old asked me, Daddy, what are you doing? Can you teach me? So how do you teach a 9-year-old when most adults don't get it? So the strategy had to be simple. Covered calls, one of the simplest strategies there is. Safe, it's one of the safest strategies there is. Predictable, well, we know exactly what we're going to make before we even do it. Consistent, I can do it every single week and no way for her to lose. Well, if I pick the right stocks that have been around for over 100 years, well, I'm not going to lose because most of these companies are going to be here long after I'm gone. That's how I got started. Apologies, you said that earlier. Thank you, Sarah. Brian Cook, what does it mean? We already said that. Oh, someone sent me a love letter. Oh, thank you, Eddie. 900,000. Yeah, that ain't going to happen. Not 9 million. Thank you, Nirvana. I'm not perfect. I make mistakes. Opinion on Devon Energy. I bought some Devon Energy this morning because everything looked good. All right. That's all the questions. I am done for the evening. All righty. You guys have a great day. We'll do this whole thing again tomorrow night. That being said, the time has come. Oh, wait a minute. All right, the time is here, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain I've lived